Global economic news for today. Middle East conflict drags global growth forecast down to 2.5%. The World Bank downgraded its economic outlook for two-thirds of nations, warning that sustained geopolitical strains have severely stifled the post-pandemic recovery. If energy disruptions along key shipping channels escalate further, macroeconomists caution that global output could crater to a dismal 1.3% before the year concludes. Global inflation projected to touch 4% as maritime supply chains snarl despite aggressive central bank interventions over the past 2 years. The disruption of vital trade corridors like the Strait of Hormuz has triggered an energy price spike. The ongoing shipping bottlenecks are driving a massive 38% surge in average fertilizer prices, compounding food security fears and keeping global inflation elevated well above initial 3.3% targets. Enterprise software spending pivots as token costs plunge 280-fold while individual raw, computational tokens have become incredibly cheap over a 24-month period. Absolute enterprise tech expenditures are soaring into the tens of millions monthly. The paradox of dropping unit costs paired with skyrocketing consumption is forcing chief information officers to rapidly shift from public cloud setups to localized hybrid architectures to protect their margins. The lost decade threatens developing nations as sovereign spreads jump 110 basis points, excluding the high-growth trajectories of India and China. Emerging market and developing economies face a prolonged era of stagnant income convergence. Driven by an aggregate government debt surge from 40% to 70% of GDP since 2010, ballooning borrowing costs are draining public coffers and starving infrastructure budgets. Gartner warns 40% of agentic AI deployments face failure due to operational friction despite a massive corporate rush toward autonomous software workforces. An immediate implementation ceiling has emerged. While 38% of major enterprises are aggressively running active pilot programs, a mere 11% have successfully transitioned these complex AI agents into live, revenue-generating production environments. Sovereign wealth funds reevaluate strategies as advanced economy bond yields harden. Developing nations are facing severe fiscal whiplash as rising interest rates in Western capitals pull critical capital out of emerging markets. The unexpected upward pressure on domestic currency bond yields by an average of 30 basis points is rendering traditional commodity-backed buffers insufficient against sudden market shocks. The clean energy sector eyed for $100 billion emergency aid influx in response to fracturing supply chains and the widening infrastructure gap in vulnerable regions. Multilateral development banks are mobilizing massive credit lines over the next 15 months. The funding is specifically structured to insulate domestic job markets from energy volatility while accelerating decentralized grid projects. Industrial automation crosses a milestone with Amazon deploying its millionth robot. The intersection of physical logistics and deep learning reached a major turning point as warehouse automation networks expanded scale. Integrating localized corporate AI models across heavy fulfillment infrastructure has successfully slashed intrafacility travel times by 10%, changing the unit economics of global e-commerce fulfillment. The Great Corporate Rebuild. 99% of IT leaders moved to overhaul operating models. A comprehensive Deloitte Global Sector Survey revealed that virtually every major technology organization is currently undergoing structural changes. As standard software engineering gives way to intent-driven prompt architectures, traditional multi-year IT deployment cycles are being replaced by modular, self-healing software frameworks. European markets introduce new €3 customs charge to blunt cheap tech inflows. Cross-border e-commerce paradigms are shifting rapidly as regional trade blocs deploy protectionist tax frameworks to shield domestic retail. The implementation of flat processing levies on small, direct-to-consumer digital parcels aims to fundamentally curb the unchecked flow of low-cost international manufacturing goods. Thank you for your attention.